why as business owners make data-driven decisions. If you are basing decisions off the back of emotion, you will lose. That is, you are in love with the business because you've got some esoteric fantasy world that you're living in where you're making those decisions. You will lose. How old are you going to be before you start to experience life like you want it? I want to tell you right now, whether you like it or not, there is a better way to do business. Hi everyone, welcome to the Business for Builders podcast. My name's Max. I'm your host. I'm the CEO here at Smith & Sons in Canada and the ambitious founder of EliteBusinessAdvisory.com. Thanks for joining us. If you're a long-time listener, appreciate you chiming back in again. And if you're a first-time checking us out, welcome. I trust you get some value today. Actually, before I get started, like and subscribe, all of the necessary office admin, if you like. And the other thing is get across to Business for Builders VIP. Hit the answer the questions. If you're a good sort, I'll let you in there. And it's a great place for everyone just to push their questions out. The group as a whole can get in there and answer those, and I will get involved in that as well. That rising tide lifts all ships, and it's super important that we develop that community where we can just talk to each other about common challenges that we face. I think that's a good thing. Rightio. So today is part two of the subject matter we talked about last week. I alluded to the essential guide for residential builders and contractors. There was a bit of an intro there. If you got that, great. If you didn't, maybe bob back. This document that I'm actually reading from right now is uploaded on Business for Builders VIP for your reference. So you can grab a copy of that. You can download that. You can print that out, make a copy, do whatever you need to do. And it's a good reference. It's a guide for residential builders and contractors. So it really focuses on key strategies for sustainable growth and operational excellence. Last week, we covered 7 points as it related to operational focus. So, we talked about client acquisition and marketing, financial management, customer relations management, operational efficiency, professional development, compliance, and risk management, and strategic planning. Now, there was, it was a very quick overview, I think in 30 odd minutes where we talked a bit about that. Today, we're going to talk about the key KPIs and activity metrics. So you would have heard, actually, I would have made mention of that last week about the activity key metrics. So KPIs, activity key metrics, in my mind, they are one and the same. They both have a very, dynamic impact on our business as we monitor those. And so we're gonna charge through 5 of these points today, key metrics and activity metrics, sort of KPIs, so key performance indicators, and activity key metrics as well. So, it's funny because, really I think, guys, just to start out, when we start talking about monitoring a lot of what happens within the business, we are so consumed with selling and billing or building and billing, those 3 parts, that we don't really actually know the performance. What is the performance of the business? Because we don't have a scoreboard or a dashboard or something where in some cases we don't even know what we should be tracking and why we should be tracking it. Like, I think the common ones that when I'm talking to builders, what they have no idea is your CAC, your CPL, and your ROAS, which is your customer acquisition cost, your cost per lead, and your return on advertising spend. And that has a massive impact, or it does tell me a large story about what's happening in the business, and as it relates to marketing and advertising and branding and that sort of thing. And so, what I'm getting at is that, Max, I don't really want to track that data. I just can't be bothered. And really what they're saying is, I'm so busy just delivering the product, doing the business from an operational standpoint, is terribly difficult because it is a new, it's a new discipline. It's something else they've got to pay attention to, and it's not something they're used to doing. And so, for me going forward, if I speak to you as an elite business advisory coach, I'm really interested in what support mechanisms do you have around you? Do you have a business partner who's got a complementary skill set, or do you have someone else in your office or in your business, in your world, that can get their head in the game as it relates to the data entry and the tracking, and then can deliver to you reports, things like that. So, a lot of what we're going to talk about in this episode is very much outside our typical wheelhouse. I mean, as a carpenter by trade, not once did I ever hear the word in 20 years, key metrics, KPIs, nothing. Like it just wasn't even on, mate, I don't even remember getting any advice or counsel about, markup, let alone the difference between markup and margin. And so it's why I think I'm so subconsciously committed to, pushing out these podcasts. What episode number is this? 198. So this month we're going to, in the month of August 2024, we're going to push out to episode 200, which is pretty awesome. And, we really appreciate, our audience and how they've hung in there with us. It's been awesome, to get that far. But, there's so many things that are outside of our wheelhouse and we don't even know about it. And it's through shows like this where I'm trying to bring to the table, or at least create the awareness as a minimum. Hey, be aware there is a difference between markup and margin. I think the only educational part about markup was when I saw a contract from a housing industry association in Australia. It said you can have a 20% margin. And you know what I did? I would have taken the materials and added 20% to that, which is now it's not 20% margin. I was using that as a 20% markup. So I was losing money because my interpretation, understanding of that concept was not accurate. And that's the problem. And it's why 50 to 80% of builders will go out of business in the first 5 years. And of the remainder that are left in the next 5 years, 50 to 80% of those guys will go out of business as well. Why is that? Because they don't understand pricing models and they certainly don't watch their numbers. They do not know their financials. And so this is why we talk about KPIs and activity key metrics. Right, financial metrics. So what is a financial metric that you're talking about? Right, gross profit and net profits. So track the difference between revenue and the cost of goods sold, which is your gross profit, and your total earnings after all of the business expenses are paid, i.e. net profit, okay? Guys, this is where I start to lose guys, whether they're a franchise operator with Smith & Sons or whether they're an elite business advisory, business coaching client. They really start to go, I'm struggling comprehending all of those movements. But it's very important because if our gross profit doesn't exist at the right level, that means our pricing model is not good, or our delivery mechanism is not good. If our fixed expenses are above, say, 15 or 18% of our target revenue, that's not sustainable. Anything over that means you're top heavy and you're going to, of the gross profit that you're not creating enough of, you're not going to have enough gross profit to even pay your expenses per month. And of course, net profit, that's your earnings before income tax, depreciation and amortization. That is not even, you're not even going to have a net profit, in the high single digits, let alone the double digits. And if it's around the 2 and 3%, you're in trouble. So, those sorts of things are the metrics that tell me a story about a business before I've even talk to you about what you might regard as your core business. I just want to see a P&L. I want to look at the numbers from last year, and I can look at your fixed expenses. I can look at your GP. I can look at your net profit, and that'll tell me really what's going on. And then if that's not high performing, you're going to be one of three things. You're going to be too top heavy, your marketing message is not very good, or your sales process is pathetic. It's going to be one of those three. So that's what those metrics, that's a story it can tell me. I can read it, I can see it, and it makes me feel a certain way. So brace yourself. But please don't be scared, because at some point we've got to rip the Band-Aid off. So if as a business coach, I try to bring awareness, I then implement some education around that new understanding. And then, of course, there's accountability. How are we doing? Why do we not get our homework done? Those sorts of things. So if you feel you need that kind of leadership in your life to get you out of the status quo and the bog that you're in, then maybe you should just, shoot across to elitebusinessadvisory.com. Click the button. It'll say, I think, book a consultation. I'll give you 30 minutes. We'll talk about your business. We'll double down on maybe some good things you're doing and some gaps in your traffic. Look at some root cause analysis. I'll send you out with as much value, and then you can make a decision whether you want to work with me as a business coach. That's up to you as well. Okay, fixed expenses, a percentage of target revenue. I just talked about that. We want to monitor our fixed expenses on the fly. Guys, there's only three ways you make money. Your pricing model, so how much markup you apply, how quickly you deliver the product, and do you deliver it on budget or under budget, and your fixed expenses, right? If you can run your business lean, that is better. Now, I don't want you to be the guy going, well, Max said to me to run it lean, so I'm going to put my nail bag and work, on weekends and work 14-hour days on the tools. That's not sustainable. It's not. I want lifestyle as well. So we've got to have a business that has good systems, and those systems are run by good humans. So we've got to have good recruitment as well. So, I'm not, it's just got to be all in balance. And this is why it is so fluid. It's so dynamic. Our building companies, the minute you've got 2 or more jobs on the fly, your business is highly dynamic. If I've got 1 or 2 jobs going max, I can probably juggle those mentally. I don't need no massive spreadsheet to tell me what's going on with my business. But I know this, that it's best that if you have only got 1 or 2 jobs, that you do use some measuring mechanism. You know why? Because what we're trying to teach you now is obviously bring awareness to you, which we maybe have done today. And the other thing is that we want you to understand that developing the technique first is important, and then speed will come. As some of you might know, I play in a little cover band here in this town, and the song that I'm learning at the moment, and we've got a rehearsal coming up in a couple of days where we're going to get together and, try and put that melting pot and see if we can play this song. And playing Burning to the Ground by Nickelback, now love or hate them, I love their attitude, I think it's cool. And they play some pretty cool rock and roll. But, for me, I must have played that song now in the last 3 weeks easily 100 times over and over and over and over and over. So what I'm doing is I'm learning. So I go to YouTube and I find some guy that can actually play it, and then I will slow that down because I can regulate the speed of the video, and so I can see where he puts his fingers. Now, that's me kind of getting the theoretical understanding, but then there's the implementation. I've got to pick my guitar up. I had to go and buy a 7-string electric guitar to do that, right? And so for me, it was one thing to know where to put my fingers, but that riff happens so quickly, and there's several variations to it, and you got to know where to go. So what I had to do is start slow. So if you only have 1 or 2 jobs, you can go, Max, I don't need that. I want to grow a big business to $2 million, but I don't want to do spreadsheets while I'm 1 or 2 jobs. I'm saying that's foolishness. You need to be working on your technique. You need to practice. So when you hit the stage, it comes naturally. Your muscle memory, and this is what we're talking about. So now I haven't got time to think about where my fingers go on the fretboard. They have just got to go, and I've got to respond. So if I think about responding, it's too late, okay? And so for us as business gangsters, we have to understand that our muscle memory has to do its job, because if I've got to think about every time, it's too late. Okay, so we've got to be able to make quick decisions and be able to respond proactively, see what's happening in advance and make a decision ahead of time, not constantly being firefighting and going back and resolving issues that keep biting us in the ass. Why is that happening? And so, I think understanding where we're at in our business as it relates to gross profit, net profits, fixed expenses is important. And the other point here, which I alluded to, was advertising spend as a percentage of target revenue. You want to ensure that all your marketing expenses are aligned with your revenue goals to maximize ROI. Now, I would recommend somewhere between 1% and 3%. That's a fairly industry standard. Now, that includes both your marketing spend and also, let's say you've got a videographer like I have over here, what their labor is worth. So that all goes into that 1% to 3%. Now, if you're not doing that, let me back up. If you can't do that, because you do not have the financial wherewithal, that is money that needs to be spent if you want to expand your business. Now, if you haven't got expansion capital, that's a problem. So we now need to take a step back and go, what are we doing in our current state of business as let's call it a smaller builder, and what are we doing now that we're aware of expansion capital versus operational capital? And maybe I should do an episode on that, just those two things. Because what we have to do, if we are going to, we cannot just go and, what do they say, fling the mud against the wall and see what sticks. We can't just, what do they spray it, put it out there and just go have a crack and see what works. Guys, we've got to be calculated. We cannot just take a risk, because our livelihoods rely on our ability to make good, well-informed decisions. So we talk about, and this goes back to why we do KPIs and activity key metrics, is we want to be business owners that make data-driven decisions. So if we are going to make data-driven decisions, because that is a very responsible way to guide your business, if we haven't got the data, we can't make responsible decisions, okay? I am all about taking risk. However, it's calculated risk. I will take a risk off the back of the data. I might as well just take some money and put it on black at the casino, because that's what you do in the way. When you go, I'm going to take a risk and I'm going to invest it all back in the company, you missed the most important part, and that is tracking the data. Now, when you've heard me talk about sales, I talk to a client, I say, based on my experience and my historical data, this is what I think your project's going to cost. I'm not really interested in their opinion, other than the fact I need that feedback to see how much work I've got to do or whether there's an impossibility here, and I cannot bridge that gap, right? So data is where it's really, we rely on that information to make the decisions as far as, so if you haven't got the ability to market between 1% and 3% of your target revenue, you've got to look at your business, your pricing model. Like guys that are only marking up by 12% or 15%, God love them. But I am telling you, you cannot create any expansion capital. If you want to work paycheck to paycheck for the rest of your life, fill your boots, mazel tov. If you're happy, that's all that matters to me. But if you want to build a business and you're tearing your heart out because you can't expand the business, I am telling you why. Now, you may not be able to sell jobs at the highest level because you don't have the sales skills. You might not be able to close deals with the good clients because you're not demonstrating enough value, or you don't even know what that terminology relates to. See, so it's, we're going to talk about this at another episode, but I've talked about the speed of the lead determines the speed of the pack. You as the owner of the business must continue to develop. You've got to know that if you are going to build a business, you are not the guy. If you're going to build a $3 million company and you're a $500,000 company, you are not the guy or gal today that you need to be to build that to lead that $3 million business. You must change. It will be complete arrogance and ignorance if you think that you don't need to change. I am telling you, Mr. and Mrs. Business Owner, you are dreaming. I'm telling you, I've seen it enough, okay? Ego needs to be gone, okay? I don't mind you having some confidence, right? Mixed with the equal measure of humility. That's where it's got to be, folks, okay? If I sense any ego, immediately I say that person will self-destruct, because I have seen it. They don't listen. They tell me I don't understand. They say to me that they know better. They say to me they can't do it. And I'm going, mate, I'm looking at the data, remember? Wise business owners make data-driven decisions. If you are basing decisions off the back of emotion, you will lose. That is, you are in love with the business because you've got some esoteric fantasy world that you're living in where you're making those decisions. You will lose. Please get rid of the ego. Cut it out of your life, okay? I sit here as the CEO of a company in Canada, as well as a business coach, and now as well as a building company owner. And every day I say to myself, what am I going to learn today? Because the further I go, the more I realize how much I don't know. You cannot have that realization in your own heart and your own head if you have your ego stacked. You're the type of person that's going to spend money that you haven't got to buy shit that you don't need to impress people who don't give a shit about you. It's ludicrous. That's what ego does to you, folks. Enough already. If you want a successful business, you've got to get smart, okay? So let's change. Let's make a decision today. No more stupid. No more stupid, no more stupid, no more stupid. I am going to develop as a better business owner. I'm going to improve myself. Now, whilst you are changing your business model based on changing your mindset, based on getting rid of all of the ego that's in your life, okay? And knowing that we've got to spend money because profit is tied to your marketing, okay? I've heard multiple other industry professionals make that comment, okay? I didn't come up with that, but I can categorically say the reason my guys can mark up at 43 and 45% and win projects is because it's tied to our branding and marketing, okay? So it's not even a speculative. I've got metrics. I've got projects that are happening right now that are in that zone, for real. Okay, so what separates you and your business, and why is your business different from my business? Well, it's not. We're all in the renovation and remodeling game, or the custom homes, or whatever the case is. But the difference is the marketing capability. So if it is a case of education before revelation, which then comes implementation, you need to go and get educated. 2 books I want you to read, okay? $100 Million Leads by Alex Hormozi and Day Trading Attention by Gary Vaynerchuk. They are the 2 most recent books that I have as it relates to marketing. I've now bought the hard copies. I got it on Audible. I liked what I heard. They are both very textbook. Guys and gals, I know you're a builder and I know you're good at knocking nails into wood and I know you're a carpenter and whatever. But I'm telling you, we are not in the construction and renovation industry. We are in the media business, okay? If people do not know about you, you don't get a chance to show them how good you are. And of the people that do find you, you're probably going to have to work for them because you haven't got a good high-level amount of opportunity to speak to, so you can't be selective. You can't disqualify at the highest level. So you're going to find that your pricing model is going to suffer because you're desperate and you need to win the work to keep the doors open, okay? So I would highly recommend. I've got those 2 hard copies on my desk. I listen to 15 minutes of each of those in the morning whilst I'm looking at and reading through the book with Gary or with Alex Hormozi, okay? This is me. This is what I said to you. The further I go, because technology changes, the marketplace changes, the dynamics in the marketplace change, and I've got to keep up with those trends. If I don't, that is nonchalance and it's ignorance, and it will kill you. It will destroy your business. It will turn it into a vanilla, average, below average business because the owner of the business is below average. That's why I've got to develop. That's why you need to develop. So if I'm like offending you, I am sorry. I don't mean to do that, but I'm trying to bring awareness on what things that I implement in my business life. Developing the several businesses that I own and operate today. Okay, so that's financial metrics. That's 1 out of 5. So we're going to speed it up here. Work in progress accounting, okay? Now, make sure that you get across to Business for Builders VIP. Answer the questions. It's a private group. If you're a general contractor, a builder, a subcontractor, an apprentice in the trades, I will let you in. I need you in here because the education level has got to get out there. Costs you nothing to be a part of. I drop, resources like this occasionally, depending on demand, and I wanted to help you. So get across there and you can follow on. You can listen to this podcast. You can look at where I'm at in these notes. But the reason I reinforce that again is because when I start talking about work in progress accounting, guys and gals, I bet the majority of people today, unless you've heard me talk about it, you've never even thought about it necessarily because you never even knew about it, okay? And so what I'm doing here, cash flow management. So work in progress accounting, we need to understand how much cash in the bank is truly available after accounting for the costs of the ongoing project. That's why we do. What we want to do is understand what the equity is that we have in the business. How much of that money is ours? We do not want to go and spend the money, that which is really earmarked to pay subcontractors and suppliers. Let's be responsible. So another word for work in progress accounting is over under billings. And I'm going to read you the definition so it's actually on this audio, but this is in the document that's on work in progress, that's on Business for Builders VIP, okay? Over under billings. Overbilling occurs when you bill a client for more work than has been completed, leading to higher short-term cash flow but potential future liabilities. Now, underbilling occurs when you bill for less work than has been completed, which can improve future cash flow but may strain the current operations. Okay? Work in progress accounting helps you manage these by comparing the percentage of completion of a project to the amount that was billed. So percentage complete, that is really the methodology, or that's one of the supporting frameworks behind work in progress or over under billings. Okay, this ensures accurate financial reporting and helps you make informed decisions about project management and billing practices. Okay, I'm not going to talk too much about that because that's a bit of a deep subject. And, I want you to, if you were to Google either, work in progress accounting or over under billings, or on YouTube, go and do some searches there, you need to this is about education. Go and watch some videos. I watched hundreds of hours of Gary Vaynerchuk in late 2016, And I believe that I was able to establish the Smith & Sons brand in Canada and produce or put together a $4 to $5 million business in 4 years because I understood the power of media. Now, if you need to understand something at that level, you need to go and find someone that can speak to you at your level as it relates to over-under billings, because you need to understand that when you're doing 5 projects and there's $750,000 in the bank, you need to understand what your level of equity is in your building company. What's your liability? How much of that cash at reserve or cash at bank is yours? That's why we do it. Okay, point number 3, reserves and savings. So I would suggest 2 to 3 months of fixed expenses in cash reserve. If you're going, that's really going to give us, it's going to do 2 things. In the event there's a bit of a slump in sales or the market, or over Christmas or whatever, you're going to have the cash at bank then to run the business in the event that we have a bit of a slump in performance. And I guess the other thing is, if we want to then go and adventure off and maybe put on a supervisor or superintendent, you're going to be able to sustain the cost of the business for 30 days and not go down to the wire and have 0 cash reserve. Okay, so there are a couple of the reasons why we want to have, say, 3 months fixed expenses in reserve. And then, of course, once we've developed, and this is why it's a staging process, once we've developed 3 months, worth of operational expenses as our hard deck in our business, then if we've done that, we can then go ahead and put some expansion capital. So you say, look, I might need $25,000 to invest in marketing this year. Right, my next goal, while I run as a one-man band, I've improved my pricing model. My customers are really happy. I'm getting video testimonials. I am now going to start putting aside some expansion capital because I really want to make sure that I'm going to have the money to invest in a videographer, spend money on Google AdWords, put proper advertising, where I've rolled out organic, it's reacted, the marketplace has reacted well. I want to pull that in and deploy that as a learn more or a call to action advertisement on Facebook. Those are the strategies. And this is where we, for me as a business coach, it's not about giving you a manual and, tapping you on the ass and sending you out going, now you're good. Because there's so much, the dynamic that's within your business, you're an organic creature, and I counterpunch a lot. So, I just did a client meeting this morning, and I always start out every one of them. I said, right, give me the highlight reel, give me the week in review, the good, the bad, the ugly. Because out of that experience, I can hear the tone of your voice. I can understand what's in your head. I can hear what you're good at and what you're winning at, and I can also hear what's challenging within your business. Out of that, we start to craft a very customized approach to business coaching for general contractors and residential home builders, okay? And subcontractors. So it's important that we understand, what's going on. So, that's it. Cover your fixed expenses. Understand you're working a plan here, folks. You can't just go from 0 to $5 million. You've got to develop the techniques before you can actually execute. And then you've got to be consistent and persistent. You've got to be pricing better and trying new things, and then looking at the successes you've had, making things better, and really developing the business system at a high level. Now, we initiate and then we optimize. There's always going to be things that you try that don't work, part of the game. Then there's things that you're going to notice that go really well, and you go, wow, I didn't expect that. And then we build off the back of that. Gary Vaynerchuk, as it relates to marketing, he talks about you should be crafting your next piece of content off the back of the comments that come from your previous piece of content. Because if the marketplace is speaking to that, it's telling you that this resonates with the marketplace, do more of that. That's what we do in system development within your business as well. So that was reserves and savings. Point number 4, bank account management, okay? I think you should have 3 bank accounts, okay? 2 minimum, 3 would be good. The first one is an operational account. That's for day-to-day stuff. The second one is your tax account. You might put some aside for income tax and GST, making sure that we've got a high level of responsibility as it relates to, the tax that we do collect, as well as the third one there might be the subcontractor and suppliers account. I recommend this to my guys, my clients, my franchised operators. I make sure that they understand that if you get a check for $100,000, you're marking up by 43, you're creating a profit margin of 30%. Then out of that $100,000, 30% is there for you to run your business. The 70% or 70 grand should be put in what I would call a vendor account. Think about that one. I know it's a lot of bank accounts, but guys, it is the easiest way to tell you whether you're getting into trouble or not, okay? If we're not doing work in progress accounting, because that's going to tell you at a high level what's going on within your business as well. They're the 3 bank accounts. And the final one there is bookkeeping. Up-to-date bookkeeping, that'll ensure all financial records are updated monthly to provide a clear picture of your financial health. Please don't underestimate the power of up-to-date bookkeeping. If you come to me as a builder or even a subcontractor who says, Max, I want to entertain coaching, then what you're going to have to do is really focus on what it is that goes on within your business, and then, of course, what you need to do to improve that. Now, when I look at your P&L, when I look at your books, I'm going to understand at a higher level what's going on in the way of your fixed expenses, your gross profit, and, of course, your net profit as well. So I think it helps. It gives us a sleep at night factor when our bookkeeping services are, in effect, up to date and under control. Remember, we're trying to move you from a business that's in chaos, and a lot of the time the guys go, my business is chaotic and I don't know why. And the reason why you're in a state of chaos is simply because chaos is a natural byproduct of disorder. So what is the opposite of chaos? The opposite of chaos is control. And control will come about as a byproduct of having order within your business. Having order within your business means you've actually got to have order in your mindset and in your head. You've got to understand. You've got to be able to compartmentalize. You've got to be understanding that business success is a series of steps, okay? You're not going to get springboarded to success. It's steps. It's just a process. And so the more we understand the next challenge that's in our life, that's a step up. Everything that we come up against that is pushing us down is really making us stronger, and we've just got to then, decide that we're going to push through that. Guys and gals, that is the end. Like and subscribe. One of these drops every week. Go and check out Business for Builders VIP. Answer the questions. I'll let you in. Grab that document. That was episode number 2. That was part number 2 of the 2-part series we've just done. If you didn't get last week's, drop back to episode 198 and listen to that, 197. And check that out, and that'll put those together. And, of course, if you're inside Business for Builders VIP, you'll get that document in there as well. Don't forget, if you want to talk to me about coaching, go across to elitebusinessadvisory.com, hit the book a consultation, come and chat with me about your business, and then we'll see where to from there and whether or not I can offer you some value in that regard. Go build a kick-ass business, and I will see you on the next episode. Cheers.